Hello and welcome. You're watching News 9. I am Suyash Maheshwari and this is First Take, where we bring you stories from the world of stock markets over the next half an hour. To my right is my friend and colleague Shweta Kothari. Good morning, Shweta.
Good morning, Suyash. Not a great start to equities market in India as well as in the US. A rub-off impact of what US Fed Chairman Jerome Powell said yesterday. A closely eyed commentary on higher for longer interest rates.
Exactly right, Shweta. The Indian markets also saw that rub-off effect. In fact, it opened deep in the red with first tick for Nifty coming in at 19,542 mark. Now, as you mentioned, the weakness is obviously on the back of a negative handover from the global markets. Now, Nasdaq ended about 1% lower in yesterday's session. Dow Jones and S&P 500 were down about 0.75 and 0.85%. Asian markets, Shweta, are firmly lower, and in fact they have hit a 11-month low in today's session. Now, what's ailing the equities? Now, first is the fresh spike in the 10-year bond yields, which have touched a high of 4.995%. Now, we are missing out on a headline of 5%, but essentially we are at that benchmark or the milestone of 5%. Now, why is it a significant level? Now, at 5%, the demand for government securities will go up. It will become more appealing compared to stocks. So, for investors and traders, now they'll focus more on the bonds market and come out from the stock markets. Now, this is because they are factoring in a higher cost of businesses for these companies, and when they are calculating those valuations, they are discounting these cash flows at a higher rate. That's why we are seeing some this rub-off effect coming out in the Indian markets as well as the global markets. Another factor, Shweta, is the tensions that are back in the Middle East, which unfortunately, I mean, the crisis is far from over. Now, it's not only a humanitarian crisis, it's also turning into a financial crisis, primarily because it's weighing on crude prices. Because the entire region is responsible for about 1/3 of the entire world's oil production. Now, I mean, if you're talking about oil, Brent crude is actually surged about 1% overnight, and it is currently above the $93 a barrel mark, which is just 2% shy of what at least talking to us, the experts have flagged us, that $95 a barrel mark as a zone where we might start feeling some pain, and that is the Indian market, since we are net importers.
So we are nearing that $95 a barrel.
We are currently hovering above the $93, so just about $1.7 to $2 shy of that mark.
All right, from what I remember, if my memory serves me right, if the $95 a barrel mark continues for subsequent days from here on, that could in fact start hurting India as well.
Yes, because it will bring the 1-year average to around $90 mark, and that will play a significant impact on the balance of payments, because again, India being net importer, the oil bills are a thing that we need to watch out as a market and as investors and traders. Also, I think the markets, I mean, I'm looking at the markets right now, there is a little bit of a recovery now.
Comparing some of their early losses.
Indian markets, I mean, in fact, even if you talk about Indian markets, they were very resilient yesterday. I mean, we saw a correction, a good bit of correction, but Indian markets came off about 100 points off its low. I'm talking about Nifty here. Whereas, Asian markets, US markets were trading with deep cuts throughout the session. So, Indian markets also seeing a fair bit of a recovery. Nifty is at 9:30, as of 9:30 a.m. this morning, is down about 0.2%, nearing that 19,600 levels. As we have been talking about, 19,500, 600 levels are very crucial. It's a make or break level for the index, because if we decline from here, perhaps there could be we don't know how much.
Till what extent?
2-3% decline from here on is what the analysts are saying. So, we'll closely eye those 19,500, 600 sort of levels. Even if you look at the mid cap and the small cap index, they both opened lower, but currently they are trading mixed. The small cap index is up about 0.2%, whereas the mid cap index is up about 0.2%. Also, volatility, which we have seen a spike of 3 to 4% on pretty much every other session. Today it's up about, India VIX is up about 1% only. And shifting focus to sectors, Shweta, the Nifty Bank will be closely eyed. Now, between Nifty and Nifty Bank, it's been the weaker one. It has been a major drag on the markets as well, and in fact we saw Nifty Bank not only slipping below that 44,000 levels, but it also slipped below the 43,800 levels, which was seen as a crucial support. currently we are hovering near the August lows, and I mean, I think there has been some recovery because Nifty Bank is currently trading flattish with a positive bias. Nifty Bank is up about 43,774 marks. So the market is perhaps going for that, crucial support of 43,400. Among other sectors, auto continues to provide some support to the market. The auto sector is up about 0.5%. In fact, as of 9:30, I think it's still holding those gains. IT pack continues to be a laggard. It's down about 0.21%. FMCG pack on the whole is doing well. Earnings season kicked off for them yesterday, but among like the three companies that came out yesterday, I think ITC and HUL are trading with significant losses this morning, with losses of about 1.5% for both companies.
So the results haven't quite impressed the streets.
The results haven't quite, I mean, I think the results were pretty much in line with what the street was expecting. I think it's a guidance coming from these companies that has really, turned the mood sour for FMCG pack as a whole. And then there is a broader weakness that's playing out in the market as well. Among other sectors, pharma sector is also trading with significant losses. At 9:30 a.m. it was down about 0.4%. Currently, it is down about 0.64%. So it's extending losses as the session is continuing. Realty, on the other hand, is continuing to hold well. I think it was down about 0.35%, as you can see on your screens. At 9:30 a.m., it has recovered since then at around 9:58. Currently, it is up about 0.17%. So that's how the sectors and the broader markets are looking, Shweta.
All right, and since we are in the midst of earnings season, let's quickly kickstart with some of the earnings that are likely to be released today.
So Shweta, the two earnings that we will keep a close eye on is JSW Steel and Paytm. Other than that, because the results of ITC and HUL came down only after the market hours, I think the street is also going to factor those two results because they are heavyweight stocks and they have a big impact on Nifty as a whole. Okay. Now, if we
then before we move ahead, let's quickly break down HUL's results because the stock is down this morning.
Yes, HUL stock is down in the morning, as you can see on your screen. Revenue figure, was a bit of a dampener. Overall, the results were pretty much in line with what the street was expecting. It was a positive surprise on the profitability front, but revenue, Shweta, was below expectations. Now, as you can see on your screen, revenue was up about 4% on a year-on-year basis, coming in above the 15,000 mark. And in the year ago quarter, it was around 14,751 crore. Net profit was a beat. As I mentioned, we have seen a 2,717 crore net profit in the last quarter, whereas in the year ago period it stood at around 2,616 crore rupees. Margins have improved in line with what the street was expecting. It is up about 130 basis points compared to the year ago quarter at 24.2 in Q2 FY24 versus 22.9% in the year ago period. Now looking at the segment wise growth, Shweta, the home care segment saw a mid to single digit volume growth. The home care segment was up about 3% on a year-on-year basis. The revenues were up about 3% on a year-on-year basis. Beauty and personal care segment recorded a 4% year-on-year growth. And the food and refreshment business also saw a robust growth of about 4%. As you said, the stock is down. It's trading with significant cuts this morning. It is currently at 10 a.m. this morning. The stock is down about 1.45%, holding above the 2,500 mark. And if we look at the historical, price performance on a 1 month basis, this HUL stock is up about 3%. On a 6 month basis, the stock is up about 2%. But on a 1 year basis, that on a 12-month basis, the stock is currently trading 2% lower on a 1 year basis, Shweta.
All right, and before we go to ITC, let's quickly also get in our guest, Kranthi Bathini, joining us on the show from WealthMills Securities. All right, we don't have Kranthi just as yet, but as far as guidance from HUL is concerned,
Shweta,
that is a major issue, and that is what is hurting, I think, sentiments on the streets. HUL is saying that they are losing their market share.
And they're losing their market share to small and regional business, especially in the mass segments such as tea and detergent business. Now, the overall the guidance coming from HUL, it's a dampener for the stock. I think that is one of the primary reasons why we are seeing a 1.5% dip in the stock prices, along with the broader weakness in the market. But ITC has also flagged some concerns about demand for its businesses. So I think that will be closely tracked. Also, what was the impact of
is the rural demand picking up for HUL?
The rural demand has not really picked up, Shweta, and I think that is one of the pain points for the for HUL. Although as far as second half of the financial year is concerned, it is HUL's management is cautiously optimistic on demand. Now it expects the government capex cycle to pick up and the festive season to drive some bit of recovery as far as volumes are concerned.
So perhaps third quarter would be crucial.
Third and fourth quarter, they are expecting some sort of a recovery because of the festive season, and also the wedding season kicks off around, I think, this December or January. So probably Q4 also will have some of those numbers playing up in the volume and the revenue growth. However, they are cautious about the commodity prices first of all, and what sort of an impact the monsoon, now El Nino conditions, had on the crop output, which we'll only see in this quarter and the
playing
next quarter.
Playing up in the third quarter, yes.
All
right, so that is as far as HUL is concerned. Let's also quickly move to ITC, whose results came out yesterday, and again a very mixed bag.
It was a mixed bag for ITC. Profitability front, as I think we also mentioned in yesterday's show, profit figures will, like profitability, or on a profitability front, we'll see improvement on a year-on-year basis, but revenue, the volume growth, Shweta, will be a pain point, especially for consumer staples, as rural demand is lacking, and commodity prices. If you remember, like there is a ban on wheat and rice, if correct me if I'm wrong,
of wheat.
there is a ban on export
of rice,
which is hurting the agri business of these companies. Now let's go through the numbers first. Now profit figure came in about 10.3% higher on a year-on-year basis for ITC at around 4,927 crores in Q2 of FY24, that is the September quarter. In September quarter of FY23, it stood at around 4,466 crore. Now revenue was up 2.6% on a year-on-year basis. It came in at 16,550 crore mark versus 16,130 crore mark in the year ago period. EBITDA, which is essentially a proxy for operating cash flows for these companies, came in at 6,041 crore mark, up 3% on a year-on-year basis from 5,864 crores in Q2 of FY23. Margins, however,
margins are down 10 basis
margins
points. Does that mean that there's more expenditure towards advertisements?
I think that is
and the raw material prices are
reasons.
also up.
Yes, that is. We have seen a bit of a volatility when it comes down to ITC and the raw material prices, because one of the key raw materials, especially for the FMCG business, other like consumer staple business such as a Fabel or which Yippee noodles, and they have a line of FMCG products out there, right, in the food. And so wheat prices and rice exports, because of the ban, I think there was some price pressures for the company. In fact, if you look at the segment wise breakdown for ITC, the cigarettes business, Shweta, which is the primary driver for the company, it contributes to about 65 to 70% towards its revenues, whereas for the profits it contributes about 75%. So that saw a robust growth. It saw a robust growth of about 10.1% on a year-on-year basis. So that is a very good surprise on the positive side for the investors of HUL. Now other FMCG products, as I said, Fabel and other products that they have in the lineup, Sunfeast, have grown by about 8.3% on a year-on-year basis. However, there was pressure in the agri business as well as the paper business. Both are down. The agri business was hurt by this ban on wheat and export prices. But if you look at it, it's not a company specific issue. It's an industry problem. So not a major dampener for ITC. I mean, as the macroeconomic situations will evolve, if the ban is perhaps lifted, we'll see that effect on the revenue throughout the industry as well, right? So it's not a company specific issue. In fact, even for the paper business, which saw a sharp decline of about 9.5% on a year-on-year basis, it's not a major contributor for the company, but demand from China has been muted. Also, China's supplies have escalated, in the last few quarters. But the management has said that it's seeing some green shoots of recovery over there. So perhaps going forward in Q3 and Q4, the paper business will bounce back.
All right. Paper, agri business not doing too well. Hotel business just about managing well. Cigarette business doing
fabulously
exceptionally well. No dearth of smokers in India just as yet. Kranthi Bathini joining us on the show. Kranthi, thank you very much, sir, for taking time out. Good to have you back. Let's quickly understand what's happening with the FMCG pack so far. ITC came out with its results. HUL has declared its results. What are you picking up? Rural demand is not back just as yet. Margins are still hurting, contracting.
Yeah, Shweta, yesterday, the three major FMCG companies, HUL, ITC and Nestle, three have announced their results. It's a mixed bag, we can say. Nestle, which was a underperformer earlier, it come up with a strong set of numbers. But whereas HUL and ITC can be mixed set of numbers. One thing, going through the numbers, if we analyze and drill down the data, what we can see some kind of pressure with respect to the revenues. Probably what we can conceive for the second quarter is the monsoon was a little bit slow in the beginning. The sowing season was a little bit late. So that will have some kind of impact on the earnings of the rural population is concerned. But we can see some kind of revival at this point of time. So it's a mixed set of numbers at this point of time. But third quarter, where we can see some kind of the inflation is cooling off, food inflation has been coming under control. So the coming quarter can be expected to be a better quarter in terms of the rural consumption is concerned. But right now, again, the worrying factors at this point of time is the geopolitical events, rise in the crude oil, which will keep the cost pressures again with respect to the transportation and other also the petrochemicals is concerned. That's going to have some kind of impact. The reason is I just want to mention to you, okay, what crude is related to. Crude is related to FMCG. Of course, the transportation is the other thing. See, some kind of chemicals which are used in even our toothpaste are the ingredients of crude oil. Some kind of petrochemicals. The important chemicals that used manufacturing of toothpaste is extract of, it's a derivative of crude oil. So crude oil have so much importance in terms of the supply chain is concerned. So we need to wait and watch how there will be a soft landing in terms of the crude price going ahead. Of course, going with the numbers and the charts, crude seems to be topped out. That's what we have been discussing in our earlier interactions also. But at this point of time, given the kind of the geopolitical tensions that are going up, can keep the crude oil prices at a elevated level for some more time. That's where all eyes are watching. Crude is currently the joker in the pack for the Indian markets. We have a strong improvement in terms of the domestic economy. Even in fact, IMF has, which is a very conservative organization across the globe, they have mentioned that by 2028, India can emerge as one of the strong contributor to the global growth. It's not for the somewhere in the domestic economy. Right now, IMF is talking about India can be a key contributor for the global growth. So that's where the Indian economy is going to play a role in the coming years. So overall, FMCG sector is in a right space, but we need to wait and watch for some more time to analyze how the things are going to pan out.
Now, Kranthi, as you rightly pointed out, there is optimism around India. In fact, talking about optimism, we are in the thick of the earnings season. Week 2 is about to end. What's your assessment of Q2, India's Inc.'s Q2 report card so far?
It's a mixed, Suyash, till now. We have not seen any kind of blockbuster kind of surprises at this point of time. Till now, the results have been muted or in line with the expectations. So we have not witnessed any kind of blockbusters or earning surprises on an upside. Right now, okay, it is in line with the expectation because the Q2 quarter, the first 2 months, the food inflation and also the other margin pressure was clearly evident with respect to the earnings of the companies are concerned. And as we discussed, IT earnings are quite muted at this point of time. So it can be envisaged at this point of time as a mixed quarter at this point of time. But we are still a quarter percent of the earnings season, and the companies are yet to declare results at this point of time. So just wait and watch the auto numbers, the other infra, capital goods. These are the companies that are expected to post a good set of numbers. So we are not even middle of the earnings season. We are just a fortnight of earnings season. Let us see all the major companies and mid-cap companies, how they are going to declare the results to get a complete view of Q2 results are concerned.
Okay. Now, Kranthi, we are seeing some sort of a pressure build up in the banking pack. Nifty Bank is currently below the 43,800 levels, which in the view of a lot of analysts was the make or break level for the stock. In fact, it's currently trading flattish, but we have gone to the levels of August low. So, I mean, how are you reading the numbers? First of all, can we expect more correction? And if so, what will be the floor for Nifty Bank?
I can see this is the base range, Suyash. That's what I can expect, because the major concern with respect to Bank Nifty is concerned, the key contributors like Kotak Mahindra and the big boy HDFC, their contribution is crucial. Their outperformance is crucial for Bank Nifty. That's where the underperformance is getting derived from both these entities. So, but what we can expect is one can expect a positive momentum as the economy grows, as the economy stabilizes. Banking and financial services is the epicenter of the economy for the growth is concerned. So these are not the stocks to ignore. Some kind of consolidation that's taking place at this point of time because of the overall consolidation in the economy at this point of time. So, and also we are in a high interest rate regime. Okay, probably from the remarks of Jerome Powell yesterday, what we can sense is these high interest rate regime can be there for some more time. But the best part of India is we never had zero interest rate policy. We never had a negative interest rate policy. RBI maintained central bank have maintained a strong regime with respect to the monetary policy is concerned. So some kind of the impact is there on Indian banking and financial sector also. But we are in a sweet spot. Just a underperformance of 3 to 6 months cannot be taken for the underperformance at this point of time.
No, you said we are in a sweet spot, Kranthi. Would it be fair to say that Indian markets is operating in silos while Asian markets have opened in deep red? We are trading nearly flat at this point.
And we have shown some quite a bit of resilience.
Absolutely.
Compared to other emerging markets. Looks like India is turning out to be a safe haven in that entire pack.
Yeah. So it seems to be, because in the lower end, we can see every trading day some kind of buying interest is emerging in Indian market. Okay, but of course we can't say, because when it's raining altogether in the city, even though we are having umbrella, but we are bound to drench some kind of water on us. So if the global market is in a turmoil time, we cannot escape. Okay, we will be part, but since we are having the strength in the domestic economy, that is the umbrella what we are carrying, that will help us to carry on. But it would be some kind of global impact. Definitely it's going to have. But what we can sense in Indian market is some kind of buying interest is emerging at the bottom end of the market whenever the markets are drifting down.
Right. Kranthi, talking about global markets and the commentary coming from US Federal Reserve Chairman Jerome Powell. Now, to me at least, it looks like that Fed has found itself in a kind of a conundrum here. Like on one side, you have inflation, which although has slowed over the last few months, it's still far away from that 2% long-term target of there. And if you are to cut interest rates, so I mean you have to keep interest rates higher for the first place for the prices to cool off, so that is hurting equity markets. On the other side, you have 10-year bond yields, which by the way are benchmark for mortgage loans, student loans, auto loans, so that are now nearing that 5% mark, so that is eating away, that is hurting the pockets of the average American. So what does Fed do from here? Is it time to relook at 2% as that long-term inflation target?
Suyash and Shweta, on a lighter note, the most confused regulator across the globe right now is the Federal Reserve. The kind of commentary they are giving is 1 week, one person, 1 week the other chairman, the governor. What they have been doing in the financial market is they are confusing the world. And in fact, it is acknowledged by Jerome Powell in his earlier speech. The analysts at Federal Reserve, they could not able to forecast the data in a right way. So right now it is completely premature. 1 week we'll get set up the news that this is the end of the hiking of the season. 1 week we'll get the news. After fortnight we'll get the Federal Reserve is quite strong to control the inflation, and we are going to have a further sustained tight monetary policy. So the data and the commentary what they are giving is completely divergent. So at this point of time, I'm in a mood to wait and watch how the data and how they are going to take the measures. Till now, what they have been forecasting is some kind of status quo they have been maintaining. But when the first rate cut or when the first rate hike, further rate hike, we need to wait and watch, Suyash, at this point of time. Because there is a divergent commentary that's coming, the data and the commentary is coming every fortnight.
All right, absolutely, very divergent.
Two policies
US Fed Chairman, absolutely. US Fed Chairman says committed to 2%. Other members of the US Fed say maybe not so much, time to ease the policy a little bit. So you've got to look at the bond yields and the data that is coming in from bond yields as well as inflationary data that continues to pour in. The jobs data has been a mixed bag. So all in all, nobody is sure. Even US Fed doesn't seem to be too sure at the moment. Kranthi Bathini, thank you so much, sir, for taking time out, for joining us here on Newsline.
To share my views with Shweta and Ashwin on your channel.
And with that, it's a wrap on First Take. Keep watching Newsline.